But I read a note yesterday from an analyst, it's been around for a while, on a particular stock, a stock that's very, very popular among millennials. And the note itself is actually pretty terrible. So I wanted to bring it up to you today because there's a lot of lessons that we could learn from this. And this is something I see investors, or this mistake investors make a lot. And I'm not just talking about amateur investors, but even the best of analysts. And this is a mistake, listen to me here, that can cost you millions of dollars. Millions. I'm not joking. Because even as a first-time investor, say you put in you have 401k, you're putting thousands of dollars into it. Over time, this nest egg grows. It can easily grow into the millions over a 20-year period if you're adding money to it every month from your paycheck and compounding those returns. You may be thinking 20 years, man, that's a long time. Believe me, I'm 49. It's not that long. It's not that far away. I wish I was doing it younger. But this is a big mistake I see. And here's a note. It came out yesterday from MKM Partners. I'm not going to name the analyst, right? That's the firm. I'm not going to name the analyst on it, right? But he put out a note on AMC, the theater company, reiterating its sell rating and $1 target price. So he has a $1 target price on this stock. So now you're familiar with AMC Entertainment, meme stock. It's trading over $40 right now, $40. And when you're looking at this analyst and that $1 target, you may be saying, wow, holy cow, that's crazy. This is his target price. He lowered this target to $1 in May 2020. Think about that time frame, right? That was in the heart of COVID. Everything was closed. Every theater was closing, and it would stay closed for a while. So you had a company that was facing bankruptcy and still trading around $14 a share. Again, this is May 2020 when he lowered that target to $1. We all know what happened. The Reddit crowd took over, started buying the stock like crazy, sending it to over $60 a share. But again, now it's around $40. But back then, a $1 target may have been justified. I mean, if you have a $14 share, a stock, you could put a target of $3, $4, $5 on it. But $1 is a clear sign that you think this company is going bankrupt. And when you look at May 2020, you might have got away with that. That's fine, right? I mean, you're talking about AMC, which had loads of debt, their revenue stream completely 100% cut off due to COVID. And it will remain cut off for several quarters. Again, that $1 target basically implying that AMC is going bankrupt. So let's fast forward to today. Like I said, again, I say this again, AMC is over $4 a share. And this analyst came out and reiterated his sell rating and $1 target. So when I look at AMC today, there's no question it's a much different company. And so are the market conditions. And you look at box office receipts are starting to surge. More people are heading back to the movies now that COVID, that second wave, is eased. We're benefiting this because we have a great recommendation that we recommended off of this, not AMC. I was surprised to see these trends, and I'm willing to adapt and change, and we recommend a stock that's probably up like 35% right now in like a month and a half, 2 months, because people are going back to the movies. Just go back to the movies. You'll see people are starting to go back. They feel comfortable. So that changed. But what it does, it gives AMC a growth component, which we know the market loves. The market loves a growth component. It doesn't matter about revenue. It doesn't matter about sales. It doesn't matter about anything, even earnings. It doesn't matter. Rivian's a clear sign of that. It's generating $1 million in sales. And we're looking at what, $130 billion valuation, which is probably 40% higher than Ford now in GM. $1 million in sales they're doing. They love, that's what the market loves. Give the market what it loves. That's what AMC has now. It has a growth component. Operating cash flow will be positive starting next quarter compared to massive losses it saw for most of 2020. Also, AMC, their management team, did a great job raising a lot of money as the stock went high, was pushed high by the Reddit crowd and the Wall Street bets. Very, very smart. It's not what Peloton just announced today, that they're raising $1 billion, and this is after their stock just crashed, and also after management said, it doesn't need money, we're fine. They said that like 6 months ago. Now you're raising $1 billion after your stock crashed. Pretty crazy. That's not what AMC did. AMC waited for the stock to go higher, and he raised a lot of money. But after these capital raises, AMC is now sitting on $1.8 billion in liquidity. So that's $1.6 billion in cash, and also a revolving line of credit could tap for over $200 million. So over $1.8 billion in liquidity. So based on the liquidity, based on the positive operating cash flow, bankruptcy is clearly off the table for AMC. They're not going bankrupt anytime soon. But again, you reiterated your dollar stock price. This is your suggesting. This is what you believe. You're implying to the markets when you put out that note yesterday. Now, to be clear, I'm not saying run out and buy AMC, or it's not insanely overvalued. It's trading at 40 times EV to EBITDA. If you don't know what that means, EV to EBITDA is what analysts, sell-side analysts, put on the stock when they can't value it by a PE because they're not going to generate money for a long time, right? That's what that means. They use different. So if you're a sell-side analyst, you can't say, hey, I love Peloton's bike. It's amazing the stock's going higher. No, you have to have a whole discounted cash flow model, how much revenue they're going to earn. It doesn't even matter. You got to make up shit like they did with Tesla. I mean, Tesla right now is supposed to have every rent-a-car was supposed to be self-driving from Tesla. Remember that? That was now. Morgan Stanley came out with a note 3 years ago saying that's what it was going to be, right? They have to put all this shit in there to justify because they have to put numbers, figure it all out, and then come out with a target price and spit it out, right? That's what they do. That's what they get paid for, whatever. So AMC traded 40 times EV to EBITDA. Okay, again, not 40 times forward earnings, but EV to EBITDA. To put in perspective, the industry's peak all time, the industry at its highest point traded at 9 times EV to EBITDA. This is trading at 40 times EV to EBITDA. So I'm not telling you that's not insanely overvalued. I'm also not saying you should buy the stock here at $40. I'm bringing this up to you because what this analyst is doing is a mistake I see often. And it's not just from amateur investors, but as you can see, really great analysts, so-called seasoned professionals. So what am I talking about here? I'm talking about stubbornness and failure to adapt to ever-changing market conditions. Are you thinking stubbornness? It's not a big deal. How can that be a big deal when it comes to investing? It is a big deal. It's huge. It's one of the biggest mistakes you can make. And it's almost impossible to correct because it deals with psychology and changing your mind and changing the person you are. And people, they fucking hate to change. Especially older men. We get really stubborn, as our wives know very, very well. And we don't want to change. This is the way we did it. We used to write notes on paper and they got stickies all over the place. We used type. You got to adapt. You have to adapt. But if you go back and look at all the people telling you the market's going to crash since 2010, you know the list. You should know the list by now. Just go back and Google. It's hilarious. And you look at how many people continue to make that call almost every single year since then. And over that time, what happened? We experienced one of the biggest bull markets in a generation. Or how about the people telling you how the dollar is going to lose its reserve currency status? Again, for 40 plus years, people have been saying that. For 40 plus years. The dollar's going to lose its reserve currency status. Got to prepare. Own gold. Gold's going to 50,000, 25,000. I mean, we heard all these targets. Own as much as you can. You guys know exactly who I'm talking about. I'm not going to throw out names here. But these are people that get on the rooftops and they're preachers. They preach the word of what they believe or truly believe, where it's like a religion. And this becomes a cult where people buy into this message and believe every word of what this person is preaching and predicting forever. The only thing is, we're not talking about religion here. We're talking about investing. We're talking about accumulating enough wealth over time so that you're financially secure. So that your families are financially secure. To where you can live great lives when you retire. This is about you, not them. Not me, not anybody. It's about you.